The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 9th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Santa Rhodes. And I believe that we should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. I see we got a caller on the line, so now is definitely not too soon. 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 191 points. She's trading out at 18,524. S&P is up 20 points at 2159. NASDAQ Composite up 41 points. Russell 2000 up 26. The DAX closing up 163. The FTSE up 68. Gold has just made its way back to unchanged in essence, trading out at 1274. Silver up 6 pennies. Regeneron Pharmaceuticals, the leader of the upside, up $40. Martin Marietta up 22. The IBB up 21 bucks, about 8%. Biogen up 19. To the downside, Intuitive Surgicals off 32 bucks. Priceline down 17. Amazon off 16. So we've got stuff to take a look at all over the board. But let's go out to Alex in Newton, Massachusetts. Alex, thanks for calling. Thanks for holding. How are you doing this afternoon?
Good afternoon, Stephen. How are you doing?
Very good. Thanks so much for asking. And did you get any sleep last night?
3 hours.
3 hours, okay. That's plenty of sleep. We don't need more than that on eventful evening and morning like we've had. Even eventful in what you're calling now, which is the TLT. So why don't
first of all, I would like to say that from now on I will call you Magician Steve, because
okay.
You are the only person I know who a week ago predicted Trump win and the market going up no matter what. Wow.
Yeah,
and last night you were here for us with all the support at the resistance level, and I want to thank you for that. That was excellent.
Look, I just want to thank you for all that you do and for participating, being a part of the Tiger's Den. And, I mean, that's especially on nights like last night. We've got each other's backs. We've got our eyes looking at different things. And so all the information that we provide to each other is very, very helpful. So, really kudos to you and Mr. Z and J and P and everybody else that was inside. Those are handle names, folks. That are inside our
That's exactly what I
Tiger's Den.
wanted to say. So it's not my inauguration speech, but I would like to thank everybody who were in the den yesterday. That was awesome. Thank
Absolutely. You. No, it was great. I'd like to do it again, wouldn't you?
Excuse me?
I said I'd like to do that one again. When we have a market like that.
In 4 years, probably.
4 years. Okay. So at this stage here, you're calling about the TLT, and we probably have a number of listeners that are either in that, long that, short that. Tell us what you're looking at or doing with the TLT.
I'm looking to buy it in my retirement portfolio.
Okay.
So my question is, how much do you think this market already discounted interest rate hikes? Because I don't see more than 2 hikes till the end of 2017. And Europe's still in trouble and a lot of problems. I would appreciate your input on that.
Well, if we just first take a look at the TLT, Let's just look at that from a pattern standpoint and see if there's any information that we have that can assist us with taking a look at the trade. Because in this stage here, and your question in essence would be you'd be looking to add TLT to your long-term portfolio, correct?
Yes.
Okay, and so here's what we know about the TLT itself, just an ETF. Then we'll go take a look at the 30-year Treasury, see if we can figure anything out here. But with regard to the TLT, today, folks, gapping down, certainly catching up to last evening's move inside the Treasury bond marketplace. Moving down today with volume. So far today, about 16 million shares. That's going against a swing point from back in April that had only 7 million shares. This thing is at the 1 to 1.272A to B equals CD. My recommendation, since you're looking at this from a long-term standpoint, is let's say that a bottom is potentially near. Now, where would near be? One, this might be forming a combination of a Gartley buy pattern and a butterfly expansion pattern. Now, the butterfly pattern on this, let's go give a price projection. Again, just simply solely taking a look at the TLT. And, folks, I'm going to use that April 26th, the swing point low, going all the way up to the high that took place on July the 8th. And the 1.272 expansion would go ahead and get us into about the 122-ish area. So 122, anywhere right around there, is where I would be targeting, where it looks like TLT wants to trade to. Now, whether that's the area or space, as soon as you were to see some type of bullish reversal signal on a daily basis, and then a little bit of follow through with the very next trading session, that would be your signal to go ahead and as long as you're not trying to buy the very bottom, that would be your signal that a change of trend is likely to occur. Now, inside the TLT are all types of maturing long-term treasuries out there, some not so long, some longer than others. And you can always, folks, just go to the website for the ETF and you can download their exact listing of holdings. Now, Alex, if we go take a look at, which we have up on our screen right now, a very shorter term chart, we've gone into a 30-minute chart, there's a reason that you should be looking for that potential bottom, and that is that price has been moving lower and doing it with less relative energy. This is the 30-year, and this started at about 12 o'clock and 12:30. Now that we're into the 1 to 1:30 session here, we can see price continuing to push down. Now, if you were going to try to time it and buy an earlier entry, not on a daily basis, you'd be looking for some type of bullish reversal signal to occur as long as this pattern is in effect. If price starts moving down, it does with energy. This pattern is going to go by the wayside, and you just simply have to wait for the next pattern to show up. So I don't know, from a trading perspective for you, how are you trying to time it? What is it that you want to use? You want to use a daily chart and have like a real confirmation? Do you want to use a shorter term time frame to try to get a better entry?
It's not for trading, so I will probably look at 120 minutes chart.
Okay. So the 30-minute chart, I was going to let you know, it's in wave 5, moving down with less relative energy. And I would say, so whether it's a 120-minute chart or it's a 30-minute chart out here, on the 30-minute chart, we can say there's certainly a pattern to pay attention to. And that's how I would be looking at it. Otherwise, on the TLT, watch for that 122-ish area, assuming that nothing else shows up on the intraday charts. All right, my friend?
Thank you, Magician.
You bet. That was Alex in Newton, Mass. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up about 178 right now. You know, you've heard me say to you that the body of the candle is truly the essence of price, right? We really want to focus on the body of the candle. Maybe let me do this. You might be able to see it easier on a black background. So give me a moment just to do that. Punch up a new chart. And what we're going to look at is the ES Mini. Here, yeah, it's much easier for you to see. Let me turn off those market profiles. I don't need those on my system at the moment out here. And so the body, it's really the body of the candle is the essence of price. In fact, you know, I could go on this chart here just as an example. Let me see. I think if I do this, there we go. There is a chart where what you and I have now eliminated are the extreme emotions of the market. Right, the extreme emotions. We've gotten rid of the wick or the lower or upper shadows of the day's trading session, open to close, as an example out here, and we've gotten rid of all of that emotion. Now, you tell me, many of you have children out here, many of you have grandchildren out here, and is it much easier to, carry on a conversation when you've eliminated a lot of the emotion? Now, there's nothing wrong with emotion. I'm kind of talking, temper tantrum type emotion, right? Yeah, of course it is. Always easier to ration, to get a better picture, to be able to solve a problem, to understand what's really going on when you can get rid of the emotion. Now, that doesn't mean that we can't learn or that we shouldn't learn from those extreme emotions, because we should. But if we were just using the body of the candle, okay, to give us the essence of what the market is doing here right now, is there anything bearish about today's move since the market opened after yesterday evening? And the answer would be no. If we go ahead and we add back the actual wick, so there's our wick right now, is that communicating anything to you? And the answer is absolutely. I'm not going to ask you a silly question and expect a silly answer out here. Of course it does. Who is in control with regard to this market? Who is in control? I mean, is there any question with regard to who is in control, right? Because what this candle session here today specifically shows us, where the market opened last night, where it is trading to right now, where it actually traded to late last night before it sold off, where it traded down to, and this just shows you the power of the buyers. Call them bulls, call them whatever you want, but that extreme wick tells you the power the power behind this market as we speak right now. I can't tell you what's going to transpire tomorrow. I'm going to tell you what you should consider that's going to transpire tomorrow, next day, and so on and so forth. Now, I'm not trying to gauge in here the retracements or pullbacks, but the suggestion is to buy the next dip. Now, let's kind of take this chart, put it off to the side, and I posed a question inside of the Tiger's Den. And look, today is only Wednesday, so granted we have a few more days, and so perhaps the question is a little bit premature, but it is what it is. And my question in the Den was, what is similar to the Brexit bottom? This is a weekly chart that we're taking a look at. We can go to the daily, but I want to show you, the candle, the body of the candle truly is the essence of price. You know this. During the Brexit, I did the same thing. I said, hey, let's get rid of the extremes out here. Let's not worry about that on Brexit. The S&P 500 went limit down. I said, look, pay attention to the FTSE and what's really going on over in the UK. And when we took a look at the end of Friday, right, we knew that what the FTSE did, we're going to blow this up on our screen here, that it formed a Gartley buy pattern. That's this trading session right here where my crosshair is, the week that began June the 20th. That is a bullish reversal signal too, by the way, folks. So this gave us that was like a key reverse. I mean, that was a Gartley buy, a 1 to 1.272, by the way. A to B equals CD to the downside. Nice retracement, a Gartley buy pattern. Of course, the FTSE just kept on running. Just kept on running. Is our market going to do the same thing? You and I have no evidence to suggest otherwise out there. Or if you do, let's go take a look at it. Let's go take a look at it together. I've got 2 ears, got 2 eyes. Just one mouth, so I'm willing to just, close it, zip it. But at this stage here, the pattern that is similar to what's going on in the FTSE is what just formed here in the S&P 500, right? What occurred here last Thursday, Friday, was the S&P made a 1 to 1.2. I don't make this stuff up, folks. Made a 1 to 1.272 A to B equals CD to the downside. Now, in this case here, the actual price projection was 2084 and a little bit of change. And the low was 2083.79. You got to love that. I mean, that's hitting that price projection. And this week, as we speak right now, we have a nice little bullish reversal signal out here. Yesterday, we talked about how when these patterns form on the daily, right, on the daily basis, I think we are in Gartley buy number 17, that the S&P goes on to test the highs and then take out its highs. When we take a look at last night's and this morning's session, just as we did in the ES Mini out here, and we try to identify what is the market communicating to you and I, we take a look at the body of the candle, we take a look at the wick of the candle session out there. It's just clear until there's some other evidence that is provided to us. Well, what evidence is there that could be provided to you and I? Maybe you want to say, hey, it's the presidential election cycle that is out there. We took a look at this yesterday. It's worth taking a look at now that we know who was the victor out here. And with regard to the victor, this has nothing to do with who actually won, other than to go take a look at other patterns and understand when there's been a transition, either from a Democrat to a Republican or a first-year in office candidate, what does the market look like? And those are the 2 patterns that you and I have to grapple with. Because things can change in a heartbeat, I don't know that it's clear and unequivocal just yet, so I will rely on all of those other patterns that supported why Alex said, hey, last week you kept saying that this market is a buy out here. I didn't say it during the week. I said it like beginning Thursday, was my Wednesday, Thursday, when the message was out there. And so, hey, we know that we have a party shift from a Democrat to Republican. There is historical data on there when the presidency moves from a Democratic to Republican. Typically, the market forms a bottom around October the 12th out here. Now, this is the Dow. And then price moves higher, kind of with a vengeance, into Election Day. Now, these are analog patterns. They don't work exactly and always to the day out here, but many times they do. So, and this is the thing that we want to pay attention to, because it's really important, not so much today's high, but tomorrow and the next day. Do we take out this high out here, because if we do, that says the market is not going to trade sideways as would be typical with this pattern. But this pattern here, folks, we can also say, hey, you know what? We also know that we have a first-time president. And if we're going to take a look at cycles, this is what is more likely than happen. This is the reason to wear this cap, this rally cap that Stevie's got on right now, because Santa Claus has come to town. We talked about a rip-roaring, rip-your-face-off rally. Now, that was because of the juxtaposition. I don't even know what that word means, and I probably misused it, but that was because of how out of whack. And you got to love those insurance sellers out there. Man, were they loving it. They were like, they were like in that movie Trading Places, right? When Dan Aykroyd and what's the other guy's name? Were just back up the truck. Look, this market could easily be moving higher if this is a pattern through February, folks. A big, huge rally. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So let's take this step by step here. I think that's in essence what we're doing, right? Taking a look at patterns that are out there that we want to pay attention to, knowing that today's a high five with regard to the market, how strong it is out there. But what's next? What really needs to happen in order for today to be an initiation move, just as a couple of days ago when we got those signals out here? Well, with regard to the volatility index out here, and it is amazing the amount of information that you and I can actually glean for this versus calling it fear and no fear or whatever it is out here. But what we can do is right now, what we know about the cash VIX index is it has tested the 50-day exponential moving average, priced at 1555, red line on Stevie's chart. So far, it's rejected that. If the VIX index stays above 1555 today, closes above 1555, doesn't have to stay above it, closes above 1555, its message as it is right now is that, hey, that next buying opportunity may be occurring. Now, when I say the next buying opportunity, we would go take a look at the other pattern on the other intraday charts out here. In other words, short-term topping pattern could be forming. What happens if the VIX index closes below 1554? That says it's on its way down to 1260 out there. And that says you've just simply got plenty of liquidity, buying pressure, however it is you want to term it, and the market will just continue to move higher without really letting you in as far as other patterns are concerned. So that is a key number for you to take a look at. Now, that being the case, if we go take a look at the intraday charts out here, see what kind of patterns are out there, to just connect the dots, itch and stitch it. Let's go take a look at the S&P 500 futures contract. Let's look at the 30-minute chart out here, and here is what we know. What the 30-minute chart has done off of this morning's very early bottom out here, midnight-ish, if we take a look at the what pattern here, it completed a 1-to-1 A to B equals CD to the upside. Did that as we came into the 12 o'clock hour. A little bit of a bearish reversal signal, dark cloud cover next session. Never really amounted to anything because you never got follow through on the next session. We got a little bearish engulfing candle as we came into 130. We'll see if there's going to be any kind of follow through to the downside. If there's not any follow through to the downside, what we would anticipate, what we would expect is you would expect the ES mini to head up to the 2180 level. If the ES mini is going to get to 2180, the VIX index is going to trade below that 50-day exponential moving average on the daily chart is when we were looking at it on the VIX. If it doesn't, there's your signal that there's going to be some type of retracement. Retracement to where? Hey, 2138. Again, we're looking at a 30-minute chart, 2122. Those would be the two levels that I would be paying attention to. Could get worse than that. Could get more than that. Guy could easily make the case if we start to see a little bit of concern or a reversal that you come all the way back down and test this other red line out here right around the 2088-ish type area. Right now, I don't think we have certainty as to which way the market wants to trade as far as the ES mini is concerned. It's just taking a time out by making that 1-to-1 A to B equals CD. Now, all of the 30-minute charts are doing virtually the same thing. 30-minute charts, meaning in the equity futures contract. Here happens to be the NQ. Formed a nice little price RSI top last night. Nice little price RSI bottom earlier this morning, very early this morning. Goes ahead and forms an A to B equals CD to the upside. It has completed. It's in this session right here where we've got the bearish engulfing that candle that came in. This is the 130 session out here. Let's see what happens during the next 27 minutes. If we don't see follow through to the downside out here, again, just more sideways type action out there. So that's what's going on intraday as we take a look at the equity futures contracts. What else do we need to take a look at? Well, we took a look at the VIX index, the cash index, the spot index. I gave you what the 50-day exponential moving average is. We know what line of demarcation. We know the price point that we're looking at for it to provide us with a message. We also want to see just where the VIX closes today to understand whether we're going to see another less than or greater than, how do you say it, minus 10% or more to the downside, right? Anything greater than anything, God, would you say it, exceeding, but it can't exceed would be to the upside. I just don't have the proper grammar to say, minus 10% or lower. How about that? That works, right? Minus 10% or even lower minuses out here. And right now it's minus 16.44%. Why? Those are the green lines on my chart. Why? Because when you see that occur, that is a sign of either a blow-off top, which is not often the case, can be, but more likely than not, the initiation of a move to higher prices. So how important was taking a look at the ES mini candle today? How important was it for you and I to go ahead and take off the wicks of that candle, look at the body? What was its message? Bullish. go ahead, add back the wicks and say, well, what are the wicks communicating to you and I? Bullish out here. And now you've got 2 sessions in the last 3 days with initiation signals and moves to the upside out there. That doesn't mean that we're not going to see sideways pullbacks, things of that sort, but it does say that the Santa Claus rally cap, okay, that Stevie just happens to, we're getting towards that time of the season. We're certainly getting towards, right? How often does the market make a bottom and a Santa Claus rally in October-ish, October to November? How often? You go back and take a look at the S&P 500. Go ahead and blow your mind. You'll see that making the call is not that tough to do out here. And the signal is going to be a pattern. A pattern such as a Gartley buy pattern out there. Yep. Hey, you'll go see those October lows like all over the place. And guess what? In essence, we have one right now. Just happened to come in on November the 4th, well within that range out there. So that is, if I take a look at the advanced decline oscillator readings out here, the Dow is the strongest. Somebody in the den said, hey, the Dow looks like it's the strongest. No question about that if we use the advanced decline oscillator reading. Bottom panel, above 0. You've got the NASDAQ composite now above 0, as long as they don't fumble the ball and it closes above 0 and get some more follow through tomorrow. Then you've got more of an indication of a market that wants to move higher. New York Stock Exchange is sitting right just below the 0 line out here. But, this indicator has been just kind of so-so. So you and I don't put a lot of reliability on it. We do put a lot of reliability on the 2120 level inside the ES Mini. We put a lot of reliability on the 47.95 level. We're trading at 47.97 inside the NQ out here. As long as price is above those things, my goodness, its message is just simply loud and clear, crystal loud and clear. Whatever that means out there. Okay, we had so that is taking a look at the markets and understanding what they're communicating to us weekly, daily, intraday, and then those other signals that just simply complement the market being able to go to full steam ahead. Now let's take a look at. I had a request. I have had many requests that have come in, and most of those dealing with the GDX, the NUGT, the whole cast of the JNUG. So let's go ahead and answer those questions for folks out here. Those questions being, in essence, let me see. This is one. Just summarize it. Where is it? Where do you see the gold miners headed to, GDX and so forth? And one was just to ask, what's the GDX doing? So let's go take a look at it. Right now, trading at 24.39. Son of a gun. We're going to have to wait till we get back from this break, but then we'll go take a look at that. We'll go take a look at anything else that you'd like. You just have to give us a call, 877-927-6648. Email will do, steve@tfnn.com. And pings inside the Tiger's Den. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up about 200 right now. The question was, hey, where is the GDX? That is the Vectors Gold Miners ETF. Where is that headed to? So let's take a look at it in a couple of different time frames out here. Here is what we know. First, we do know that it is directly correlated to both gold and silver out here. So we know that gold had a huge move to the upside yesterday, has given back all of those gains. The GDX has been giving back all of its gains from its pop this morning. And at this stage right now, it's priced out at 24.40. From a daily perspective, which I think Tom had called or sent an email. So it's different, going to be maybe a little bit different on both charts out here. But with regard to the GDX on a daily basis, that says that since price is trading below its point of control out here, we're likely to see a pull back into the 23.68 level. It has tested and so far rejected the November 2nd candle, which had 114 million. Volume has really backed off during the day. It looks like you're going to test that level with 74 million. You know the expression, you can't bust them up. Go ahead and try to bust them down. Well, bust them down could actually take you all the way back to the October 11th high of around 23.08. You've got to try to time this with regard to what gold is doing too, though. But let's just look at this chart specifically. So from the daily perspective, which I think maybe helps S&P out in the Tiger's Den, although I can't be sure about that. That is, at least on a daily basis, what it looks like the GDX is doing. In one sense, you could say, hey, it's pulling back with light volume, but it's also tested and rejected a swing point out here, so no reason that it can't move lower. Now, let's switch from this chart, the daily chart, into a 10-minute chart, and this is going to have all of the intraday trades as well out here, so pre-market trades. Here is what we know about the GDX. It's actually pulled back to where there was a gap, in essence, a breakout. So there was a breakout. We take a look at the intraday charts that began right around, no question about this, right? November 9th, right? When we saw a gap up, we saw, gold moving higher. And so the first trade that I have on my system at 4 o'clock in the morning created the gap. So in essence, prices pulled back to the gap. This could be, on an intraday basis, a place where you could consider taking a look at a trade. If you were going to do that, though, This is going to be slightly different. I wish I could do it a little differently for you. I'm going to try something here. I'm going to try it on a different chart. Want to be able to give you some information, but I don't know that I'm going to. Yeah, I can do that. Son of a gun. You ask and you receive out here. Okay, so on this chart here that we're going to go take a look at, here's the other 10-minute chart utilizing my my Ninja Trader software out here, because I just have simply a slew of proprietary tools. They're somewhat proprietary out here. We can see from the high that came in, if this, in fact, Tom, and you're looking to take a short-term trade, which I know that you are, let the price oscillator turn up. Let the GDX get above 24.53. If it can get above 24.53, then you can look at an intraday trade up to about 24.85 level. If it doesn't get above 24.53, the pressure is still to the downside, and that daily chart that you and I took a look at is where price would be headed. But you've come back to the break from last night, or early this morning is really what I should say. Oftentimes that means you're coming back into an area where things broke out, right? You wait for it to break out, so you may be there. How are we going to know if that, in fact, occurs out here? We know because Stevie's price oscillator will actually turn up. Then you're 24.47. There's no reason for you to not wait to see if that happens. So I hope that it helps both of you, all of you, that were calling in about the GDX, the Junior Nuggets, and the and anything else that was out there. Let me go to my trusty source of emails, my cell phone. It's much easier. Actually, I found that the messages get to my cell phone quicker than they do my other internet service provider out here. So this way I can try to stay current with regard to that which is asked. Sometimes I simply overlook them here too. So I don't see any other messages that are in there. So that gives us the freedom to go take a look at whatever else it is we want. Now, when I say take a look at what else we want to, what should that be? As we just simply take a look at this page out here on this chart, what should it be? Hey, any requests inside the Tiger's Den with regard to what should it be? Hey, how about AXP? There we go. So let's take a look at American Express out here, see what it is traded at. Hey, have you seen those financials? The XLF to the moon. 81 cents. Maybe that's a place that we should go take a look at. But I believe our American Express is still one of the equities inside of the financials out here, taking out swing points. Volume today is 4 million shares on it so far, about 5 million shares so far. Previous swing had 5 million shares. So taking out that swing point with volume, the previous swing before that around April 21st had 9 million shares. So a little bit lighter there, but that's okay. In essence, this is, almost you could call this a consolidation break. Where is this going to head to, American Express? Let's put this on a weekly chart out here. Danny, we did look at bonds out there during the first segment. Sorry about that. Maybe a quick update as we come into the end. But with regard to American Express, where is this headed to? So the weekly swing was April 18th, 31 million shares. That was taken out with 49 million shares. So you've really got, in essence, a confirmed A to B equals CD to the upside. So where American Express ought to head to, just by taking a look, there's a nice little hammer low out there on the weekly chart. And if we take a look at, looks like about 74.22. You're at 68.50 out here. So it looks like that is where American Express is headed to over time out there. At his ticker symbol, again, AXP. We looked at really the daily and the weekly out here. Let's take a look at the IBB, right? When we looked at the IBB yesterday, we were concerned that maybe this was giving us a message, right? The market is so smart, isn't it? Gives us so many signals. We just have to listen, or we just have to watch close enough out there so that we can get the message, right? And this was actually, when we took a look at it yesterday, was kind of textbook with regard to the art of timing the trade, with regard to swing point analysis and taking a look at volumes out here, right? Because the thought process was, if HRC wins, the IBB is just going to tank even further. And if Trump wins, probably that is not an issue. So what we knew with regard to the IBB was the swing point that it was testing was on June 27th with 3 million shares, and that was tested with 3.1 million shares. Okay, so similar volume or, slightly higher. Never tested the bottom, traded inside there, but it was the very next trading session, right? It was that trading session on November 4th with only 2 million shares. That was a total test and rejection of that swing point low. And the expression is, if you can't bust them down, you're going to go ahead and try and bust them to the upside out here. And that's what we had been looking at for the past couple of days. So interestingly enough, in addition to what you and I looked at, which was the spot volatility index, not paying attention to what all of the futures traders, that was going out into July of 2017, were communicating to you and I. Now, that doesn't include you and I, because you and I knew that. We looked at that. We said, that is not right. That is giving us a clear message with regard to what this market wants to do. That has to be resolved. Guess what? That is in the process of being unwound and being resolved out there. Where is the IBB headed to? Probably 299.49. It's going to go try to bust them to the upside. You've got volume behind the move today. That's where it wants to head to. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 216, S&P is up 20. Let's go take a look at the physical platinum iShares ETF out here, PPLT. And this is for Mike K in the Tiger's Den out here. So as we take a look at it, just like Goldilocks, I have sold off since last night. Let me go over here. since it opened, I should say, because the ETF that we're taking a look at. I'm just looking at my other chart, see if there's any other kind of signals or anything. So, Mike, here is the only thing that we really know about with regard to PPLT, the ETF for platinum out here, is that prices pulled back. Volume today about 38,000 shares out here. Ran into trouble at this gap to the downside that has about 98,000 shares. So as it was trying to push higher, was not doing it with the type of volume it needed. With regard to a pullback here, this may be support. It's being tested as support. Could very likely be support, and that being the price of 95.88. If 95.88 or 95.83 fails, then you should anticipate that price move back to about 94.62 to 90.84 even. But 94.62 would be your next step. Then 92.52 would be the one after that. So at this stage here, what you know is that PPLT has found support out there, and that's looking at the daily chart. If we actually take a look at the January platinum contract out here, see what its message is, really very similar, right? In that price is pulled back. It looks like a little shooting star candle out here. Price is testing the top of its weekly box, which is 1001.50 out here to 1003.90. That's both the daily and the weekly. So watch those price levels. If they fail, that suggests that platinum would go ahead and pull back into the 971, 964-ish type level out there. So, Mike, I hope that helps you out as well. Okay, what else can we take a look at that is going to make sense that we haven't already taken a look at? Light sweet crude, let's go look at it. Trading up 40 cents, which is really, pretty good, right? Considering the strength inside the U.S. dollar index today, and we know that certainly has an impact with regard to light sweet crude, we may have just gotten the bottoming signal inside of light sweet crude that it's going to move higher. We've seen another test of the swing point, another test and rejection. This is test number 2. It's the September 20th swing point that we're taking a look at out here. Hey, with regard to the body of the candle being the essence of price out here, there's nothing really bearish that we take a look at. Now, it'll start to get more interesting, start to get more bullish if we see it close above 45.52. 45.52 will bring 46.23. You clear 46.23, then you couldn't bust them to the downside, and price will go ahead and try to bust them to the upside. There may be some elevators and floors and retracement levels where price gets off, but what we will know is that price inside of light sweet crude was unable to bust through that 43.77 level out there. So looks pretty good, pretty decent message as we speak right now. In the next 30 seconds, what can we take? Let's look at what is behaving poorly out here. Let me see. Intuitive Surgical. Intuitive Surgical is certainly is certainly performing poorly out here. You've got volume to the downside, taking out a B point of an A to B equals CD to the downside. This is going to give us price projections in the area here. Do this quickly, but it looks like going to give us price projections around 618. Maybe 599, but you and I would want to study this a little bit further. But nonetheless, it is a confirmed A to B equals CD to the downside. So, folks, stay tuned, because our favorite polar bear, and I do mean favorite polar bear, David White, is going to be up next. It must be the sign of the season, because Santa is in the house. We've got a polar bear, and then after that, we've got the leader of the pack, Tom O'Brien. So have a wonderful Wednesday. We'll see you on Terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.